Across decades, one market has shaped dreams and destroyed fortunes alike: housing. This is the story of how it became America's greatest illusion. For generations, homeownership symbolized success: a house, a yard, a promise of stability in an ever-changing, uncertain world. In the post-war years, optimism spread fast. New communities rose, built on opportunity, ambition, and the belief that everyone could own a piece of security. Yet beneath the paint and optimism, small fractures began to appear, warning signs that this dream was built on more than concrete and hope. Mortgages became America's most profitable product: papers, signatures, and promises, transforming shelter into one of the nation's largest financial engines. As construction expanded, the goals shifted. Homes were no longer just living spaces. They became investments, assets, and trophies of success. When financial institutions joined the housing rush, game changed entirely. Real estate became a commodity, traded as eagerly as any stock. Banks began repackaging mortgages into complex products. To investors, it looked like innovation. In truth, it blurred the line between safety and speculation. As profits soared, confidence followed. Families, lenders, and investors all believed the same story: that prices could only rise forever. Beneath record profits, debt piled high. Few saw the danger forming behind the numbers, a silent collapse waiting to begin. By the early 2000s, homes were selling within days. Demand skyrocketed, and every buyer believed they were stepping into guaranteed wealth. Lenders opened their doors wide. Credit flowed to nearly anyone, as if money itself had forgotten the meaning of risk. News anchors called it a miracle. Headlines celebrated record profits. The housing market became entertainment, and optimism drowned out caution. As values surged beyond reason, logic took a backseat. The idea that homes could lose value became almost unthinkable. Buying, selling, and flipping became a national pastime. Homes turned into short-term bets, where fortune favored those quickest to cash out. Beneath the surface, financial systems connected millions of mortgages into global networks, a chain so vast, even experts struggled to see its full reach. As the frenzy cooled, warning signs quietly appeared. Homes stayed on the market longer, and buyers began to hesitate. The unstoppable rise began to slow. Numbers softened, optimism faded, and the illusion started to show its first cracks. When payments stopped and loans defaulted, the system that once printed wealth suddenly revealed its fragile foundation. The slowdown in housing sent shockwaves through global markets, exposing how deeply the illusion had spread beyond America's borders. What once seemed like unstoppable growth unraveled at astonishing speed, as debt, doubt, and panic swept through the economy. Across the nation, loan defaults multiplied. What had been numbers on spreadsheets quickly became a crisis no one could contain. In trading rooms and boardrooms alike, screens flashed red. Confidence vanished as fast as the value of the assets themselves. Behind the data were neighborhoods left uncertain, the human side of a market once believed too big to fail. Headlines declared the unthinkable. The great American housing boom was over, and the world was watching it fall. In response, leaders stepped in with urgent measures, trying to stabilize the market and restore trust in a shaken system. One collapse led to another. Banks, investors, and entire sectors felt the chain reaction of a system built on fragile promises. Recovery efforts began across nations. Economists worked tirelessly to patch the broken system and prevent another financial freefall. With the dust settling, analysts asked the hard question: how did so many smart people miss what was coming? Out of chaos came a cautious rebuilding. The market slowly found its footing, but the illusion had left deep and lasting scars. In the years that followed, communities began to rebuild. Confidence returned slowly, brick by brick, as the nation tried to move on. The market had changed forever. Buyers became cautious, lenders wary, and the once effortless dream of ownership grew harder to reach. As the dust settled, investors saw opportunity where others saw risk. Entire neighborhoods became part of corporate portfolios. The ownership slipping away for many, renting became the new normal. Stability traded for flexibility in a shifting economy. Younger generations approached housing differently. For them, mobility mattered more than mortgages, and flexibility replaced permanence. Apps and algorithms transformed real estate into data. Prices, trends, and investments moved faster than ever before. The illusion didn't vanish. It evolved. Now it lived in spreadsheets, apps, and digital valuations instead of paper contracts. Within a decade, prices soared once more. Familiar excitement returned, and the same patterns began to reappear. The warning signs from the past faded. History, it seemed, was being rewritten, not remembered. Glass towers and high-rise condos became symbols of wealth, yet for many, they were reflections of a dream still out of reach. The dream of owning a home endured, but it came with a cost few could afford: rising debt, longer loans, endless saving. A growing divide appeared between those who owned and those who never would. The illusion had split society in two. Property became a financial strategy, not a human need, an investment tool in an economy built on speculation. International wealth flooded into U.S. cities. Homes became safe assets for global capital, not local families. The meaning of a home changed again, from a place of comfort to a line on an investor's balance sheet. As profit grew, emotion faded. Homes turned into numbers, and neighborhoods into statistics. The heart quietly disappeared from the equation. With digital tools came new temptation: instant purchases, fast loans, and housing decisions made with a single swipe. The illusion adapted again. Virtual listings and algorithmic pricing gave the market a new mask of sophistication and speed. Prices rose, fell, and rose again. The same rhythm repeated, proof that every correction carries the seed of the next boom. What if this system isn't broken? What if it's built to repeat itself, feeding on belief as much as on money? The documents, data, and reports were written, yet the lessons they contained often went unread or quietly forgotten. Large firms entered the market, purchasing thousands of homes, reshaping communities into managed assets owned by invisible landlords. Housing wealth became concentrated in fewer hands. What once belonged to many now belonged to those with capital and control. Affordability fell to record lows. For millions, homeownership slipped further out of reach, turning a dream into distant memory. Governments promised reform: more housing, better access, fairer lending, but progress proved slower than the promises themselves. From digital mortgages to automated appraisals, innovation promised fairness, yet often only reinforced the same structural flaws. The housing illusion spread worldwide. Cities from London to Shanghai mirrored the same cycle of speculation and scarcity. In the end, housing value became a matter of belief, a reflection of confidence rather than construction. The cost of the illusion wasn't just financial, it reshaped lives, decisions, and the very meaning of stability. Now the challenge is balance, building systems that create homes, not bubbles, and stability, not speculation. The past never truly fades. The same optimism and excess that fueled yesterday's bubble quietly echo through today's economy. In the online era, housing became both everywhere and nowhere, viewed through screens, priced by algorithms, detached from human scale. Ownership evolved again, from deeds and keys to digital records and investments, redefining what it means to call something home. The housing market moves in familiar waves. Each boom convinces us we've learned, until the next fall proves otherwise. Across continents, mortgages, bonds, and investors intertwine. A single market tremor can now ripple through the entire world. Each generation views housing differently, one built with hands, the next with data, yet both still chase the same sense of security. At its core, a home represents stability and comfort, a reminder that beyond finance, housing is about place and peace. The stronger the faith in endless growth, the deeper the fall when reality returns. Illusions always demand repayment in time. Planners and innovators now search for new models: smaller, greener, fairer homes built for people, not just for profit. In modern developments and sustainable designs, a quiet shift begins, a return to homes that serve lives instead of markets. The story of housing reveals humanity's oldest struggle, balancing ambition with caution and turning shelter into a symbol of identity. The dream still glimmers on skylines and city lights, beautiful from afar, fragile up close, and forever worth examining. Today's illusion is more digital, more complex, and far harder to see, yet it remains powered by the same human hope. From one nation's dream to a global obsession, the housing market became a mirror, reflecting both progress and peril.